Hello, everyone, and welcome to the second panel of Oakland City Church's Black History Month. For today, on this panel, we will address how our nation has benefited from the systemic financial oppression of marginalized groups and how ending that is essentially a collective responsibility. So we'll talk a little bit about the historical perspective of oppression and how it's created wealth gaps. We'll talk and identify the systems that still to this day sustain the wealth gap. And we'll also discuss strategies for economic justice solutions and improvement. And so with that today, I'm Adrian Walker, an elder here at Oakland City Church. Also in my day-to-day, I'm a technologist as well as a technology investor. So that's my lens of some things. Also, avid historian in some ways, and I will let Elder Susan introduce herself.
Oh, I'm one of your elders as well, and Susan Broadnax, and I'm retired, gratefully retired, from a career that I loved, and it was in affordable housing and economic development. I worked at in the wholesale banking industry, which provides credit to financial institutions to underwrite their housing initiatives and or more than initiatives, their housing business, and also did feasibility studies on affordable housing developments, which could be from 1 unit to 300 units. So yeah, it's, I loved the fact that it produced at the end of the day safe and affordable housing, which made a difference in how it impacted the lives of people.
Awesome. We'll talk a lot about that here. And I think we kind of discussed, and we might have another panel member joining here in just a moment, so everyone's aware. But we had all discussed as a panel that maybe I can set the tone of context from a historical perspective first, Elder Susan, and then once I set that stage of just really, really, really high level, what I can get in 5 to 10 minutes of this country's history as best I can, to then kind of let you lean in with the specifics of the work you did around real estate and home ownership and how that's impactful. I'll touch a little bit about that in the historical perspective, but we'll lean into these aspects. And if we have another panel member join, that will come from the technology side of thinking in the technology industry, and how that also is impacted based on these historic things. And so I thought the best place to start, we all discussed it, and it was kind of like, let's just start it with slavery and basically post-slavery. So basically going back into the context of the Civil War and kind of starting there, even though we could go earlier for the sake of time and conciseness, having everyone understand that, again, we can't talk about the inequities and the racial wealth gaps that have been created without clearly looking at slavery. So you're basically starting an empire, first off, where you've wiped out an estimated 100 million Native peoples across the continent, right? So you've cleaned the path in a way for a new society and a new empire to be built on top of this. And so that death and genocide happened. Then there's the free labor market that gets brought in under slavery to then build on top of that and create what is now the richest superpower in the world as an empire in our generation. So you have that, but then we're going to pick up the story, like I said, right after the Civil War. So as many people do know, that was one of the bloodiest, it was the bloodiest time in American history. It was a time when the nation, not too much unlike today, was divided down the center around these economic conversations and where the country should head next. And there was the Confederacy that wanted to secede from the Union and did not want to be a part of the United States anymore. And then there was the Union that did not want succession to happen. And that was the core and the crux of it. And African Americans and the slaves, I won't call them African Americans, they were slaves at the time, and former slaves then granted the freedom to move forward under the era of Reconstruction. So the era of Reconstruction in the United States is the time immediately following the Civil War. And there were some interesting things to note. So one, there were millions and millions of former slaves in the colonies and in the United States at that time. So a very high percentage. And in the South, there were many places where former slaves accounted for almost half the population. And so if you think about this, after the war, you have a Confederacy that's defeated, probably not too happy about this. You have the Union trying to figure out what happens in a post-war era of Reconstruction. And during this time, you have over 2,000 former slaves elected in the democratic process into office. The numbers that were seen in the Reconstruction era, which was about a 15-year period after the Civil War, saw as many African Americans and former slaves voted into public office as we had seen. It took over 100 years to get back to those numbers. And so you would say, well, why did that go away? It only lasted for one term. And you can go in and see senators and congresspeople of former slaves that were elected. There's plenty of historical reference to that. And the reason for it was the Jim Crow era. Jim Crow came right after the era of Reconstruction, and the South and the former Confederacy fought and cut deals with the Union and the political powers that were then in place to say, hey, if you want us a part of this stuff moving forward, we are not going to accept all of these rules. And either you play alongside us in this, or we're going to go again. And so there was concessions made, backdoor deals made, and then just after one election cycle, you wiped out all of the African Americans in political office overnight. And so I want people to put this into context. So in the 1860s and 70s, 2,000 publicly elected Democratic former slaves. We don't see those numbers for 100 years. So think about the legislation, the policies, the systems that were developed, the banking system in this country, Wall Street in this country, you name it. Every major industry in this country, including the stuff that came out of the Industrial Revolution, all were developed in between that time. And so the effect that has on a group of people when you know you are not going to be allowed to hold public office, and the economic gaps of policy that happened in it was tremendous. There are estimates in the multi-trillions and trillions of dollars of the impacts it's had on the African-American community just in that little time frame. We're not even talking post-civil rights movement. We're all talking in between the time of Reconstruction and civil rights. Then you kind of fast forward a little bit through Jim Crow. So again, segregation, everything in this country. And you're not allowed, and Elder Susan will touch on this, to own the largest asset class for over 99% of people in this world, which is your home. So you're not allowed to own homes. You're not allowed to live in certain areas that are affluent or that might be growing in value. And you're subjugated to certain places in the country, not unlike, again, our indigenous brothers and sisters that were relegated to reservations. It was a different system called redlining in this country, but it was essentially practiced everywhere. And here in the Bay Area specifically, our Asian brothers and sisters were very much a part of the redlining system as well. And I do want to mention that it was African Americans, but there were other people of color, marginalized groups that also faced the same exact thing of not being able to buy homes or purchase the largest asset class for a human being in this country to participate in that generational wealth gap. And you see this in very stark ways that are implemented directly by our own U.S. government and perpetuated by the U.S. government. And one of these things that I'll just touch on really, really briefly is the GI Bill. Okay, it's really, really important for people to get scope. And I'm only going to give this one example because of time But I want people to think about this example, and I want you to multiply that by hundreds and hundreds of examples of policy changes and things in this country during that 100-year period, from Reconstruction to basically the Civil Rights Movement and beyond. And so in the GI Bill, it is tracked at over 1 million former World War II veterans. So the GI Bill basically allowed a guaranteed backed home mortgage to veterans from World War II. It was the largest influx of policy to create a middle class from the former veteran class of coming back into society in this country. It created suburbs. It created highway systems. It created what we think of as modern day America. And 1 million African Americans, former veterans that fought in that war, were denied the use of the GI Bill to buy a home in the neighborhoods that they wanted to come live in. And if you say, what is just the, I've already alluded to the economic impact of Jim Crow, very high level. The election, the policies, and 2,000 elected officials removed in one cycle, and what that would have turned into over time. I'm giving you now a second example of the GI Bill, and you would say, well, how many people does that put into place? Well, if you just do some quick math, let's just say that each one of those veterans had to have a significant other. Okay, that's now 2 million people. Let's say that each one of those couples has 2 kids. So we're going to talk for the first generation after the veterans of World War II, and then the grandchildren, which brings us to people around my age today, right? So my grandparents would have been in that World War II era. So if you look at that, it's about 8 million Americans that just from one policy of the GI Bill were denied the economic advancement and wealth grab that we see today. So you're not allowed to own a home. You're not allowed to own a home in certain areas. One of the two. And think about the millions and millions of dollars of real estate value that then gets created from that gets passed down. So just from one policy, 8 million Americans have seen millions and millions of dollars into their family lost because of direct racism from our US government and our banking system and real estate policies. And again, these are just 2 examples. Plenty of wonderful documentaries and books that we will all put on the list moving forward. And that's just before we even get to the civil rights movement. And I know we don't have a whole lot of time because I want our guests in our panel to talk about what's happening today and how these things still affect us today. So I just want to set the stage for people that probably the largest movement of capital in the world of the modern day era was inherently a multiple of sets of oppression and policy and exploitation over hundreds of years, over almost 150 to 200 year period, that still are happening today, that set the foundations for every major institution in this country, and are perpetuated and still to this day in every major institution in this country. And so I just want people to take a breath and think about that. And it's a personal story because my grandparents are a part of that story, as with many. They were not allowed to purchase a home when they were coming up, and they were not allowed to purchase it where they wanted. And these effects, again, to this day, when we say, where are we at today? Who owns the houses today? How does gentrification happen? Why do people have to sell, or why do they keep? The massive amounts of trillions and trillions of dollars are effects of just 2 policies that I mentioned in a matter of 10 minutes, and there's hundreds of them. That's the scale of what we're talking about. And with that, I will welcome our second panel member here, James Norman. James, you just want to give a quick bio on yourself and background, and then we'll start with the first prompt questions for each of you and Elder Susan.
Okay, great. Sorry for the delay. I'm a serial entrepreneur and originally from Michigan, like Adrian. I spent the better part of the past few years just deep diving into social inequity and economic inclusion through the lens of where I work, which is technology, and then most recently launched the venture capital fund to support Black founders exclusively. Not so much because it's impact. Obviously, the impact is there, but also just like mathematically, it's the biggest opportunity in investment. So you kind of get the double reward. So it's kind of my background right now.
Awesome. Awesome. Thanks, James. And so I'll lead with a prompt question for Elder Susan. Elder Susan, we heard a little bit of the history. We touch on, in a few seconds, we touch on redlining policies. We touch on GI Bill policies. We touch on Jim Crow era, which controlled the movement of people and where African Americans could move and could not move, and how we see this today. We live in the Bay Area, the most expensive real estate division area in the United States today. The lack thereof of a Black middle class and the participation of African Americans into the tech industry, which I'm sure Howie will touch on a little bit, of who can afford and who can't afford, what gets passed down, what doesn't get passed down. Do you want to touch a little bit around the work you are doing, and again, help the audience and those listening understand again how this wealth gap was created and what essentially we're still dealing with today from these remnants from a historical perspective?
Certainly. First of all, I was, excuse me, really impressed at the amount of history you pushed out there in a short period of time. Oh my God, that was quite the accomplishment. But I just want to pick up some threads of that. I said earlier that I worked in a wholesale banking industry, and it's a good deal different from retail banking. And looking through the lens of that at history gives you a real clear perspective of the fact that as much as things have changed, everything pretty much remains the same. One of the things that we're going to hear over and over again is about the cost of labor, land, and market demands being the things that tend to drive political decisions about resources and economics. Well, economics drives issues about resources, but political perspectives and the resources that follow them. One of the interesting things to me is that at the end of slavery, we talk about reparations. There was a bill that was signed by Abraham Lincoln that entitled newly freedmen, 40 acres, because it was really clear in a country that was founded on land ownership that land ownership was key to economic prosperity. So 40 acres was promised and then reneged upon. Actually, William Sherman signed a document, it was a field order 15, that entitled all freemen to 40 acres of land that was farmable, productive land. And those who were really fortunate got a leftover mule from the Civil War. But that was all taken back and they were evicted. And what they got instead of that was the Freedmen's Bank. It was an institution that was established by the government, but was not backed with the full faith and resources of the government. It was staffed or run by people who were turned out to be pretty corrupt, and they looted the bank, taking millions of dollars. It was a savings bank, not a bank that provided any credit, but so they looted the bank and made risky investments in railroads, which were probably some of the risky investments at the time, and lost millions of dollars that belonged to the freedmen's, which set them back. Now they're being evicted from their previously given land. They have no capital to buy land, and then you start the instigation of Jim Crow laws, which creates a situation where almost anything is a crime for freedmen, and they end up incarcerated and become part of the prisoner lend-lease program. So we're back in slavery again, and this happens over and over again. This then morphs into sharecropping, which is a credit-based slavery, and then this morphs into 21st century into mass incarceration. And there are so many ways that incarcerating the bodies of people of color is profitable that we don't really have time to go into that today. But just trust me, there are lots of ways that happens. But when we go back to the 1800s, what we're really looking at is the worldwide demand for cotton. And it's not by accident that more than 1 million Native Americans were massacred, because the other part of the formula for meeting the market needs worldwide was for the availability of farmable land to produce the cotton. So you've got huge amounts of free labor, huge amounts of free land, and now America can continue to meet the needs of a worldwide market because they have these two elements. Okay, so all of this continues. It's kind of interesting because at the time, freedmen are two things. First, they're exploited for their labor, but they are also chattel. There are slave-backed securities, the very model that we use today for mortgage-backed securities. That was the value of slaves. They were actually worth more on the hoof than they were worth than the value of their labor.
You're touching on a really good point. I don't want to interrupt you too long, Elder Susan, but I do want to make a point around that so people can have a historical context. So in the era of cotton, which was the number one economic piece of the United States of America for a long, long time, right? To get a loan, think about this. These are slavery is the business of the day. And hence, just like we do today, if you're a small business, what do you need to do if you want to start up a business? You got to get backed to get the credit for the loan. So what was the credit of that era? For over 100 years, they used human beings, slaves, as the credit system. So the more you can get more loaned money to you as a business owner, the more slaves you had. They were the asset class. And so I won't go too much there, but it created, and that was the foundation, just so everyone knows, when you say how many systems are really touched by slavery, all. This started the credit system. And there's a whole podcast on this that I did with some friends that are experts on the subject of credit. But the modern day credit system, all the things that you all are experiencing, all of the major credit bureaus were built and had their foundations back in slavery, using slaves as an asset class. So how the credit scores are given, even to this day, are based in pseudoscience that are steeped in racism. And I'll just leave it there.
Absolutely. Very good point. Yeah, the plantation system was kind of interesting. Plantation owner Johnson would have maybe 50 or 60 slaves, and he might mortgage them to fill a shortfall in capital, maybe a bad harvest year. But when the territories of the states that were for the lack of a better term, captured or by America from the Native Americans, huge numbers of slaves were moved from the southwest to those territories, Kentucky, Tennessee, Texas, all of those states. And in order to purchase slaves in the quantities that were necessary to do that business, they invented these products, securitized human beings. So you're both chattel and labor. A lot to take in, but anyway, but a lot of that those institutionalized things do remain today. But it was interesting. You were talking earlier about the GI Bill, and there was a period of time from the end of the Depression through the probably the 50s when you had there opened up tremendous opportunities to develop the middle class. And you mentioned that. And it was huge. It had never happened before. And those opportunities were the Federal Housing Administration. Previously, there was no getting mortgages to buy homes is very sketchy, very difficult. But now you could get mortgages that were backed by the strength of the federal government. They were guaranteed mortgages. But you also had the GI Bill, and you had the Homestead Act, which was even earlier, which was interesting to me when they retracted the Field Order 15 and took back the 40 acres from newly freed people. They said, you don't want land that was given to you. You really want to earn the money so that you can buy it and feel great about this. And besides, the United States doesn't just give away land. That's not what the country does. But they gave away land in the Homestead Act, which was a direct contradiction. So the Homestead Act, the GI Bill, and the FHA transferred tremendous assets to individuals that had never happened before. Unfortunately, because of redlining, it was restricted to Black people. You couldn't use FHA. Also, the GI Bill, which was a federal law, was actually, or federal benefit, was actually administered on a local level. So local states would, determine who got what and when and how. So a lot of very few Black people coming out of World War I were able to access fully those funds. But I also might want to add the farm loans and farm subsidies to that. A lot of land, agricultural land, was lost by Black people because they couldn't access those funds, and which gave them a distinct disadvantage in the agricultural marketplace. So having said all of that, here we are at a place in the 20th and 21st century where Black people are still restricted about where they can live and what they can buy. And even in my lifetime, this was true. Up to 1962 in California, discrimination in housing was the law of the land. And I watched my parents experience this in the purchase of a home, a larger home, as our family increased in size. The interesting thing now is that there are some products out there that almost, and I want to say almost pretend to address these institutional restrictions that Blacks have had to endure throughout the history of this country and still today. I mean, we've seen the banking crisis in 2007, 28, where Black America lost 50% of the housing assets that we held nationally. 50%. That is huge. And it continues to be built into our system. There's a book that was written by Chris Hayes, I believe. It's called Colony in a Nation. And it really looks at the issue of the fact that we are encapsulated in a nation, but we are exploited like a colony. And this continues to be the case.
Elder Susan, I'm gonna keep it moving. I want to make sure we get Howie involved as well. So to summarize some things again, tons of policy, tons of legislation, tons of official things on the books, our own credit history, even to this day. Dateline, NBC ran a special not more than 6 months ago of a modern day couple, a mixed couple. She is white and he was black, that got 2 different interest rates going into different lenders for the same exact home and same applications. And so we're touching on historical things that are set in stone and have been set in stone. But I want to also make sure that the audience is understanding that this isn't all yesteryear. This is still happening on an active basis every single day. The credit system and the interest rate system is very different and has been tested by multiple think tanks around changing out the complexion and the color of a person with the same application to test the theory. And it keeps coming back with crazy amounts of oppression in that. So I'll leave that there, jump into Howie's thing and say, hey, James, going into your world of technology, which is essentially funded by private equity and venture capital. And again, a myriad of things that have historical financial systems in place for many, many years. Who gets that money? Who has access to that money? Who then is able to build businesses? How many and who are the types of people being hired in those companies that are creating wealth and jobs at the fastest rate in history? Can you please touch on that for the audience about what your world is like and how all of these historical things play into the day-to-day of what you have to do and see and deal with every single thing?
Yeah, I think like tying the through line, like I think we know the housing and access to credit, like historically has been, pretty dismal for Black people. So that's put us in a certain position in terms of like generational wealth. But now in current times, I think, when you look at where all the capital is coming from and how people are actually generating wealth today, technology kind of stands at the forefront of that. So like since the dot-com boom and people started getting it together and figuring out how to do this without blowing it up every 10 years, tech companies raising venture capital, that's the fastest way you can mint millionaires. And so as far as a vehicle that can start to dissipate the kind of difference in access and financial economic inclusion, the best vehicle to do that in modern day time is technology, because if you can start a company and you can get access to the capital, that's if, and you can grow and scale your company, that first 100, 200, 300 employees, they can all be millionaires. And those people start pouring back into those communities and the cycle starts again. And you can start to like open up the aperture for what it could be like. But as we know, it's not that easy, right? So when you look at it statistically, like Silicon Valley, all this kind of started in the 60s, 50s, 60s, a bunch of people from Boston, East Coast, it was cold. They heard the West Coast was nice. They came out here to it was a bunch of empty fields and started like building technology, and they were basically like nerd hippies. And what happened was they already had some money, right? Going back to the family support they could have because people own homes, they have equity, et cetera, et cetera. They had jobs in some technology space where they had some money. So they started building these companies. People start pouring capital in to scale them up to things that were becoming foundational to like, the operations of day to day in life. So over the 60s, the 70s, around the 70s or 80s, venture capital became like a real class of people actually putting in the money. The 80s was really hot, but that was built off the backs of the people who had already been in those companies, which were pretty much all white people. And so that continues to perpetuate the cycle of coming from Ivy League, coming from the Harvard, MIT, Stanford, and having those people be at the forefront of being founders of those companies and funding those companies. When the dot-com boom came along, that was like the first point of access for any small set of Black people, because if you had the proximity to it, the knowledge of it, there was enough nonsense going on that you could send a pitch deck along and they wouldn't even notice who you were, and they would send you back money. So like for the small amount of Black people that were around at that point in time, they did get that money. Those people are still around today, but that was only like under 20 Black people. So that's the point in which you start seeing Black people touch venture capital. But at large, a portion of us aren't even aware that this is an opportunity. And then for those who are aware, they're blocked out of the opportunity because of the bias that there is in the deployment of the capital. Truthfully, capital just started really touching Black founders over the past 10 years, and the challenges have been very tough up until the point of George Floyd in terms of getting capital, because the bias continues where your worldview of the problems you're solving and how you solve them differs from the person that you're speaking with. And so that person doesn't exactly value the opportunity in which you're going after. You also have less resources to work with. And because people of color, I can speak specifically to Black people, because the people you're around, they can't take the risk to join a company and not be paid. 95% of Black people who start like tech startups are solo founders. And that alone almost disqualifies you for most VCs kind of rubric around how they look at companies. And then when you have the mode of communication, not being that most of these Black founders aren't from the Silicon Valley area, the communication style differs. And so what happens is bias starts to creep in, where they start to think this person's not intelligent, this person doesn't understand the abbreviations and the language that I'm using, even though it's the same as the language they're using. But if you're not in the know on the code, I don't think you're worthy of this investment. I can't get excited about you. And in general, what's come to be true is this early stage mode of investment where the average white founder has the friends and family money, the access to the bank, the grants, whoever it might be, to get something going. And they come pitch this vision that's grand. This again is where your financial background, your standing, your safety net comes into play. Because when you have that conversation as a Black founder, you're truly building a company that you both want to grow to be big, but you also believe is going to have a major effect on your generational wealth as well as a bunch of Black people around you. So the weight of that is not lost upon you, and it comes across in conversation. When the white person pitches, you're mainly pitching about, can I conquer? So it's not about community. It's not about like, wide generational wealth amongst your community. It's about what can I do to conquer? And that comes through in conversation. And that's the part of the conversation that is most palatable and familiar to the people deploying the capital. And so it's an emotional decision that's made to give away these millions of dollars at the earliest stages to people who don't have products or barely have a company. And beyond the communication mode, beyond the types of things they're building, there must be the emotional connection. And in general, there can be a lack of empathy for Black people in these discussions, a lack of understanding. And so it leads there to be a disconnect in the personal connection that can be made in a half hour or 2 hours of meetings. And without that personal connection happening, without you finding that thread that drives the emotional response, the capital doesn't get delivered. And so what happens is we're blocked out of the opportunity to take visions and build them into billion-dollar companies. The people who are giving the money to these VCs, because oftentimes people see VCs as like rich people who are like deploying their own money, when they're just money managers, people moving money around for other people and taking a fee for it. What you find is when you look at VC, you'll find a very broken business. You'll find a business where, there's tens of billions of dollars under management, and 75% of them fail at their job, but they get the typical institution and they continue to get access to capital to move it around and continue to fail. Only like the top decile, top 10% of venture firms are making a performance that should be representative of that class. So there's lots of money being moved around that's not going to the right place, and it's still not being put in the hands of people who don't fit the typical archetype. And then early on, now post George Floyd, it's kind of looked down upon, so it won't happen. But up until a year and a half ago, if you were a fund that they found you deploying capital into an inordinate amount of people of color, your limited partners, the people that put money into your fund, might say you're deviating from the thesis that you originally pitched us. You said you were going after the top performing founders, the people who are building the future of technology, the people who are doing X, Y, Z in the sector. And by sheer nature of their bias and their racism, they'll say, but we didn't sign up for a diversity fund, right? And now you have the people who are building these venture capital firms early on. They're in their first fund, their second fund. they're in battle with these LPs that are supposed to be backing them for a generation of funds, because they're going out and finding the best businesses. And because they don't happen to look like the typical archetype, the people who give them the money are looking to back out. So now you end up with this complexity of people trying to make a living and create generational wealth around their community, like these other Black people and people of color building venture funds. But in order to make that living, like, they're being pigeonholed into investing into the typical archetype. So they're not being given the leverage to actually be the controllers of the money that they're supposed to be controlling. So there's a small handful of people that took that risk and did what they did and delivered massive returns, and no one has anything to say to them anymore. But the lion's share of funds out there couldn't take that direction, and they had to think about their own bottom line. So what it comes down to is, only in the past couple of years has there been the open opportunity to begin backing Black founders. And as of last year, January 1st, there was only 420 Black people who ever raised venture capital in the history of time. And 8,000 people raise venture capital every year. So that shows you, like, the dissonance in what's happening in terms of deployment of capital there. If Black people don't get access to that money, there will never be any close rectification of what economic inclusion could look like in this country, because we'll be too many generations off from when it was supposed to be kind of readjusted in the first place.
Right. And James, can you just help the audience understand what percentage let's just call it a $50 billion venture capital industry that you've alluded to, that the vast majority of those investments are lost, right? And are given to people that completely lose all the money, right? So out of that $50 billion industry, can you help the audience understand what percentage actually goes to Black and brown founders today?
Yeah, less than 1%. So, the less than 1% goes hand in hand with the 420. Less than 1% is, like, it's so small that we can't actually, like, quantify it. And then less than 3% of that money is actually managed by people of color. So of all the venture capitalists, less than 3% as of, like, a few years ago. It's probably up to like 4 or 5% now. The past 1.5 years is, I have a fund now. So is Adrian. Like, we're getting more involved. We're not getting access to the exact same amount of money. But less than 5% of that money is represented by people of color who actually manage it.
Right. So there's the founders who come up with ideas for new businesses that pitch the venture capital industry to invest in them. And as you've alluded to, the results of the numbers speak for themselves. It's less than 1%. So I always tell people it's like the class action lawsuit that's happening in the NFL right now. You had this rare moment in history where the wrong text was sent to a Black coach who basically broke the rules. There's a discrimination lawsuit to the NFL right now, because basically it's saying, you already know you're not going to hire Black coaches. There's one Black coach in the entire NFL, and it's a league that's dominated by over 70% African Americans that play. And this is for all sports. And so in that, just like in the venture capital industry, I always tell people you only can make two conclusions typically. Either that number is correct, meaning that Black people and Black and brown founders do not deserve even the percentage of their population amongst the world, right? So you're lesser than, you're inferior, which goes back to white supremacy, right? Like, if the world only sees less than 1% active, then I'm telling the world less than 1% are deserving, even though the population is 20% or 18% of total population for each of these Black and brown founders, right? And then with above that level, the VCs are saying, well, I'm only money managing for the people who give me the money. And they're telling me they don't want me to be deploying the money in this way. And you would say, well, who are these limited partners? What classes are those? Can you speak, Howie, a little bit to who are, because it goes back to historical.
This goes back to the railroads and the people who own the credit systems. The LPs is Charles Koch and Rockefeller and Dietrich Foundation and W.K. Kellogg and, Ford Foundation. Like, the LPs are these, like, historic families with so much money. What's my man in Pittsburgh? Carnegie Mellon. This goes back to families with, like, billions of dollars, like, from a long history of whatever. Like, and while their current descendants might do away with what their grandparents or whatever did, they might have no relationship to it and denounce it. Like, the capital they're deploying came from the things that Susan was talking about. And so those family offices make up for, I don't know, a good like 35% of the capital. And then there's endowments, which is really goes back to the schools, which are, again, the money's still funneling for families, just going into schools and then coming out of schools and going into venture funds to, manage how they, handle their actual operations. So all of that really comes into play. And then I might be jumping ahead here, so you can always reset me if I'm wrong. But like, when you think about all this money going into the tech, and then what happens when the exit happens, and then you have all these millionaires, then they go buy all the houses. So tying it to what's happening here in your local geography, right? The values of these homes going up and the money people are willing to pay for housing, because the money isn't real. It's like monopoly money to them, right? It was literally printed overnight off of venture capital money that went to a company that grew over 5-7 years. And now they're rich. They didn't start the company. They weren't even the first 10 people at the company. They didn't come up with the strategy for the product they're selling. But they own enough of that company and it exited for enough that they have enough capital to go put $1 million down at home. And now you're back in a situation where Black people aren't getting access to that money, right? So we're not fighting with the same knife and the same knife fight. So now you're going to buy a house. You're already getting the lesser value because you're showing up looking like we do. And you do not have the same capital as a weapon to wield at it, right? You might be 20% down. You might have found someone to even give you a loan, but you're not wielding around $1 million in down payment. And so now you are, even though you make a good living and you technically should qualify for purchasing a home, you're more challenged in getting access to that loan. And you are extremely challenged in actually getting a home in the neighborhood where you might want to live, because the competition is so stiff because of what's going on in tech. So now not only are you getting the money out of tech, you're getting the home equity as well, because you can buy up all the property. So like, there's like a big disconnect there, because, when I speak with people, even who I know, as I look at homes and stuff like that, they'll say, well, yeah, I think you can get this place. And like, they're thinking about it from the standpoint of just pure finances. I'm thinking about it from the standpoint of sending my white friend to represent me when they go and look at the place and say, my friend's out of town, I'm just checking it out for him. Oh, he wants it, I'm gonna put in an offer for him. Like, I don't want to show up, because like it lessens the chance of the conversion. So all of this stuff plays together. Like, the more access to capital you have, it just begets more capital. Even in going to get the loan, if you have more capital, you can pay less, right?
Yeah.
If I can put $1 million in the bank, they'll be like, you know what? Don't pay us the principal, just pay us interest for 10 years, and then buy it cash. When you take this other money you haven't been spending, invest it, re-up it, and buy it cash. Like, there's just more options offered, but you can't be involved in any of this unless you're able to get into the funnel in the first place.
Let me ask you a question. We've been talking about the racist wealth gap, but we're on the precipice of the transfer of more money, generational money, than we have ever seen. I'm the generation of the boomers, and we're on our way out of this planet. And they're going to transfer, for instance, you look at the Walton family, there are 7 members of that family that are on the Forbes billionaire list. Mm-hmm. And over the next maybe 2 to 3 decades, we're going to see the majority of the wealth of this nation resting in the accounts of maybe 1,000 families. So this is no longer an issue of racism. This is a class issue.
Right. Yeah, right. I definitely agree. I was going to make one note on that.
Go ahead.
Like, when you think about the class issue, because white people have had, because remember, it was not the most educated and the most rich white people that got homes out of the GI Bill and all that. Like, that was normal, just regular, people who were given that access. So that money has been lasting for a minute. So like, people feel like they have a certain level of privilege and they're in a certain space, right? And this is what leads to the divide in the country in the first place, around people taking my jobs and this and that. They feel entitled to these things they've had for so long, as opposed to understanding that they're sitting at the same level as this other person, no matter what they look like. And so that's where this that's where this common bond should be existing, because the fact is, there is less money circulating in the small businesses, and there's less credit available in general. It might be less available to Black people, but if you ain't got money as a white person, it's also not available to you. So like, you also cannot build wealth. So it's just, there is the racism, systematic barriers in place that put us at a lesser position. But for those who do not have capital, you're still stuck in the class system as well.
Right, right. And ultimately, as I always like to remind people, racism is an economic issue, and a lot of people don't really fully understand that. It's our empires. There's always in every single empire in human history, and the Bible teaches about this, the division of tribal networks to give the haves and the have-nots. In our country and in our empire, race was the chosen the determinant of the haves and have-nots, but in every society, they have some version of it. And so here in the last couple minutes here before we wrap up, and I know it went pretty fast, and you all didn't probably get all the things you wanted to say in, but can you help from a lens of followers of Christ, what the Bible teaches us? On Sunday we heard from the Proverbs. Can you give us any in about a 1 or 2 minute summary or wrap up? Can you help speak to any key takeaways that you want? I'll start with you, Elder Susan, and then Howie. Any takeaways that you want people in the Christian community to think about, or things that, again, scripturally and how Christ teaches us to be, plays into all this conversation, and what people can be doing to participate and be a part of the conversation.
Sure. One of the things that the scripture does, God has a lot to say about finances, and in his economy of scale, everything that he says has more than one level of understanding. One of the things that I look at is the warning he gives us about pursuing our reasons for pursuing wealth. But one of the things that I'm looking at, and this is about the issue of where do we go from here, is the issue of, in Leviticus, they talk about the Jubilee year. And I'm not going to go into the specifics of that because of the time, but while it is generally a portion of scripture that really talks about the second coming of Christ, it's also a portion of scripture that talks about God's intent about justice, financial justice. And what happens is that every 49 years, there is a Jubilee year in that 50th year. And there's a reset. Everything goes back to where it was. The land goes back to the tribe, and the slaves are set free, and the debts are forgiven. And I think it's an opportunity for us to look at our responsibility about each other and the issue of social justice, which is a biblical principle about surrounding finance. Not only how we deal with it as individuals, but how we deal with each other, what our responsibility is to each other in this. And then I wanted to just say quickly about the fact that, and this is going forward too, so where do we go from here? One of the things that we do as ordinary people to acquire an asset that is appreciating is to buy a home. This is a purchase-driven society. One of the things that I would suggest is that when people approach that, they approach that not buying into the model that society presents them, because that's set up to achieve a purpose that may not benefit you. It benefits the system that is in place. But look at other alternatives for how a person can live, and how a person can acquire an appreciating asset. You don't have to buy a big, spacious house. There are lots of models for how you purchase a home, and you can make up models. It's just an issue of of being creative. So it's a conversation for another day, another panel, but I just wanted to put that out there to say just because you don't have a bank account full of money doesn't mean that you can't afford an appreciating asset.
Yeah. I think that's definitely a thing I've learned in more recent times. I think it's super interesting. From my side, I'm not like super versed in like quoting verses from the Bible or anything of that nature. But I think like, honor the Lord with your wealth is something that like anyone can live by. Kind of like the way I see it is when it comes to people who are typically wanting to do well by society, who might not be directly familiar with the problems of the oppressed, like the easiest go-to might be to like make a donation to a nonprofit or something like that. Maybe go do the meal thing on a Sunday. And those like the meal thing more helpful than nonprofit. But like a lot of these things, these nonprofits and stuff, and coming from a family that with people who actually work in nonprofits, I have a nonprofit, like there are band-aids in a system that's broken. Like, so it's like, you can keep buying band-aids and everybody needs band-aids. We don't want to bleed to death. But like, think about other ways that you can be involved in some, reducing like systematic headwinds that can actually start producing towards the solution. It's kind of like I have a nonprofit that me and Adrian started actually to help Black people get into tech and be able to raise money. And like, it was a Band-Aid and we got people some money and they got to some places, but it was good, but it was just the beginning of something that needs to be solved at a greater level. Because really it's the access to capital that's going to allow them to scale into the billion-dollar company that actually has the massive like economic effect that we're looking for. So I think about that like just even outside tech, thinking about it in small terms. Like when you're involved in a panel at work and you're hiring a person of color, think about what people are saying about that person versus what they said about the white person that came before them. When you're selling your house and a person of color that could buy it, like, don't just think about them buying the house. Think about what it means for the economic empowerment of this person that their parents were likely blocked out of doing that, and it's actually even more challenging for the person at home if you don't intercede and be part of that process. Like, there's an exchange of wealth happening. Economic empowerment is not coming out of thin air, right? Like, it takes a little bit of effort and capital put towards it for it to work. And sometimes we have to kind of again think about where we're pointing our efforts, pointing them towards God and not towards our greed. Like if you're good and you have your generational wealth and you know where you're going, feel comfortable to put someone else in a position, and maybe you didn't make the extra $30,000 you're gonna make, but that $30,000 is not imperative to you. Like being able to look at it on a more human basis. What is it that you have and how much do you have? And if you can afford to, empower someone else to create the kind of comfort and level and the kind of wealth you have, one should do that.
Awesome. Well, thanks so much for all of that, both of you. Thanks for that insight. And hopefully, everyone will hear it and grab a nugget of something that they can do moving forward and how they can participate in the conversation moving forward. So thanks to you both, and until next time.
Thank you.
Thank you.